how are you able to double your money in real estate?
One of the big things that comes with private market investing is that because it's illiquid, there's a premium. So you are expecting that your returns are going to be higher. And on a long-term basis, you can double your money more quickly with the right sponsors in the right projects.
Someone that invests in the stock market and buys and sells public equities, what's the main difference in investing into a company through the stock market or investing into our real estate fund?
So I think the biggest difference, and this comes down to the fact that those are public investments and these are private investments, and they're illiquid, right? That means that you don't have the opportunity to just get your money back right away at the click of a button because you heard the news about this company having a problem, right? And if you were to invest in a public company that was focused on, I guess a REIT is probably the best example. And so if you were in a hospitality REIT and you had heard that the hotel market was crashing because nobody was going on vacation, you could sell your stock. You'd probably be late, right?
Yeah.
Stock market's probably,
Yeah.
Everybody else is already doing the same thing. And so the value of the stock goes down and you get whatever you get when you go to sell.
Yes, the illiquidity in a private real estate fund like ours can protect you in a sense.
It can, and it can reduce volatility, right? And one of the reasons that it can reduce volatility is because you're not sitting there on your phone checking the price every day. And that's true with development in general as well, because development projects are always going to be illiquid because you're having to invest the money in actually building the building, like going through the design process. You start out, you go through the conceptual design, the entitlements, the schematic design, the design development, and construction documents, and the permits, and you build the building, right?
Yeah, and
and
you have real holdings inside of the building itself.
And so during that whole process, you're investing the money, or maybe you as the investor make a one-time investment. We put that out into the project, and over time, the goal is to actually create the value by creating the building, right? And so at each one of these steps, as we finish the design, the entitlements, the permits, the building, we're creating different layers of value that at the end of the day, we hopefully are returning back to the investors with some level of returns that are greater than the stock market. So
yeah, absolutely. Like some people always question me and they say like, how are you able to double your money in real estate? And can you answer that question?
Yeah.
How is it doubled?
So one of the big things that comes with private market investing is that because it's illiquid, there's a premium, right? So you are expecting that your returns are going to be higher. And on a long-term basis with the right sponsors, that can definitely be true. You can double your money more quickly with the right sponsors in the right projects than if you just were to put it into an index. But it all comes down to decision making for you as an investor. Are you picking the right sponsors to invest with? And are you actually underwriting the deals as well? So I think part of the obligation is on the investors to make sure that they're doing their own due diligence on what are they getting into. And the same thing is true with the stock market, right? You don't want massive price to earnings ratios where everybody can see that the value is not there, but you're jumping in because everybody else is. Same thing happens on the private markets. They've got great marketing and your friend is investing with this person. And sometimes the referral is great, but sometimes you're moving into a space where you should be looking into it on your own.
To dig even deeper into questioning sometimes where money can go when it's invested into anything out there, it's the topic of fees, right? And that goes for the public markets and the private markets, where I just nerd out about this stuff sometimes. But when you compare index funds, for example, there's index funds that charge different fees, right? So how can you spot out on the private sector where a sponsor may be baking in an absorbent amount of fees and layering them in where you ultimately don't have much upside at all?
There's not really a way that you can do that just when you first meet someone or you first see an opportunity. The reason that there are PPMs, right, private placement memorandums, and there are laws for private market investing that we have to abide by, whether it's on the fund side or on the direct investment with the syndications. We have to make our fees known to the investors. And this is true for all of the other people doing in our industry. And so actually reading the legal documents and getting several of them from different sponsors and different investment types and being able to compare across the investments is really the best way to do that. And there are general rules, not rules, but there are general guidelines, kind of market standards that exist. A lot of the time when people hear about funds, it's 2 and 20, right? Yeah. A 2% asset management fee and a 20% promote. But the detail of how that actually works, what is the 2% calculated on? What is the 20% calculated on? Does that 20% come out before the investor gets their money or after? And those are things that you might look at a marketing piece, 2 and 20, you're like, oh, everything is fine. But in reality, you need to read those legal documents and see how does that work? And is it investor favorable, or does it create perverse incentives for the sponsor that you're working with?
Yeah. So does the deal make sense? Is the sponsor telling the truth? And just always do your due diligence on any investment you're making.
And I wouldn't even say that it boils down to them telling the truth or not telling the truth. Sometimes there are dishonest people, of course, but they can honestly say that it's 2 and 20, but in the document, like I said, the way that gets structured and who gets paid first, that matters. And we don't have super clear terminology that on a one-pager that you can tell. Just people don't, the industry is not that mature.